Welcome to Terra Talks, where we talk about all things real estate. In each episode, we'll tackle current trends and topics of interest, both locally and regionally. However or wherever you decide to tune in, you're not going to want to miss this.
Welcome to Terra Talks. My name is Brian Puckerin. I'm a senior real estate valuer, and my guest today is Michael Tomlin from Tomlin Insurance Brokers. Welcome.
Thank you.
How are you doing?
I'm good, thank you.
Okay. We're just speaking about insurance today. So can you describe what insurance is to us?
Insurance, probably the simplest format I can think of, is it's a safety net for life surprises. You can use an example, and probably the easiest way to look at it or relate to it is in a situation of a car accident. Mm-hmm. When you have that accident, you say, "Oh crap! At least I had I have insurance to protect me." Right. So it's that surprising moment when you think, "Oh my goodness, what am I going to do here?" Hopefully you have insurance there to protect you and put you back in the way you were.
Okay. What would you describe are the benefits of having insurance?
The benefits?
Yes.
So I think the benefits are two things. One, it is a financial protection. So banks, if you ever take a loan out from a bank, be it a car, for your house, for everything, they insist that you buy insurance.
Yeah.
So, and the reason why they do that is they're protecting their asset. If it happened to have a problem, you can put it back to where it was. So that's one benefit of it. And two, just comfort of mind, I guess, is the other one. A good example would be this Hurricane Beryl bearing down on Barbados on July 1st when it was like a Cat 4. And you're like, oh my goodness. At least if you had insurance at that point, you can say, well, you know what? At least I'm insured. If there was a problem, we're protected. So some level of comfort, I think, is two things to look at.
Okay, interesting. So you mentioned loans and then you mentioned Beryl, both of which are real estate related. When is a good time to obtain homeowners insurance, or when is a good time as well to update your homeowners insurance? So obviously things have changed over the last 3-4 years when it comes to construction costs.
Yeah, so I'd answer that in two ways. The first one is when do you buy insurance? So you should buy insurance for your house when you've purchased the house. Typically, your lawyer will tell you either when you put down the deposit or at the point where you're exchanging contracts, you should be putting insurance in place at that point in time. In the terms of the year, it doesn't matter. The price doesn't change really unless there was some huge hurricane that affected the rates at the end of the year. But it generally doesn't matter when you put the insurance in place. What was the other part of the question?
When should you update your insurance?
So you should be updating your insurance. And this is probably the most critical part of a homeowner's insurance is that you need to insure it for the replacement cost. Mm-hmm. That is the cost to replace plus VAT, plus professional fees, plus debris removal. And it comes to a number. And that's the number you should insure. If you do not insure for that number, the problem is an insurance company has in every policy, so every homeowner's policy, has a clause called the average clause. Okay? And the average clause says, and it's a bit of a mouthful, if you do not insure for the replacement cost, the insurer has the right to proportionally reduce your claim by that percentage you are underinsured. Okay? So what does that mean? That means that if you should have insured it for $1 million and you choose to insure it for $500,000 because you say, look, I got this concrete building, I'm never going to have a claim, and the most that I could have is $500,000. So you insure it for $500,000. If there was a fire and you had $250,000 of claim damage, you say, sweet, I've insured it for $500,000. It's $250,000 claim. I get my $250,000, but you don't. Okay, because you should have insured it for $1 million. The insurer says, well, wait a minute, you're 50% insured, so instead of getting $250,000, you're going to get $125,000.
Oh, wow.
Okay, so it is, and actually, after Beryl, which was really interesting for Barbados and quite scary, is that of all of our claims, and we must have dealt with 30 claims here and in the islands, probably 80% of them were underinsured. And this is because over the last 4 or 5 years, the cost of construction has gone up so much. When they were getting their claims and you extrapolated out the cost per square foot, they were underinsured and were penalized in these situations.
So is there a standard recommendation to get your homeowner's insurance updated every year or every 2 years? Is there a period of time?
So what you do and what a good insurance broker or whoever your agent is will do is they will put a clause in your homeowner's policy that says instead of it being 100% average, it is 85% average.
Okay.
So meaning that you have a 15% leeway before they can penalize you with this proportional reduction.
Oh,
so if you insured it, instead of $1 million, you insured it for 900,000, you're still within that 85%. So if you had that claim for $250,000, they cannot penalize you. Okay?
Oh.
And I'm answering your question in a roundabout way.
Go ahead.
Is so what you want to do is you want to make sure that you get the value within that 85%. And then so let's say you did insure it for the 100% $1 million, you probably have 2 or 3 years before you got to look at it again because of inflation and stuff like that.
Yeah.
Now, if inflation was huge 1 year, you might want to look at it. But typically, I would say you want to relook your values every 3 to 5 years. If you haven't looked at your values in the last 3 years, you are underinsured, in my view.
Fair. Okay. What risk does homeowners insurance cover?
Okay, so a homeowner's policy typically covers 5 things.
Okay.
Your buildings, so your structures, your contents. So anything, the best way to look at that is you take your house, turn it upside down and shake it. Everything that falls out is your contents.
Yeah.
And then it's for your public liability. So public liability is essentially your liability if someone happened to slip and fall in your kitchen.
Yeah.
That covers that. And then employer's liability. And then the last one is loss of rent or alternative accommodations. So those are typically the 5 things that are covered under a homeowner's policy.
Okay. Are there any negatives, would you say, to getting homeowners insurance?
Negatives? Well, people don't like paying the premium. That's a negative, I guess. There's negatives in the sense of that there's deductibles. So typically for a homeowner's policy, there's 2 types of deductibles. There's a deductible called a catastrophe deductible. So a catastrophe deductible is any damage caused by hurricane, windstorm, earthquake, volcanic eruption, and flood and overflow of sea from those perils. Okay?
Okay.
So the best way to look at it is that anything that would affect the island as a whole, that's a catastrophe. Okay? Those perils carry 2% of the sum insured.
Okay.
Okay? So if you had $1 million house, your deductible would be $20,000.
Correct.
Okay. That's quite a big deductible. And then on the other smaller perils like burst pipe, burglary, the deductible range from $500 to $1,000, so relatively minor. But that's probably another negative of having insurance is you got to take that. And actually, typically on a small catastrophe like a small Cat 1 hurricane or tropical storm, the issue is that people's deductible, your claim doesn't typically go over that $20,000, right? Because there's not enough damage to make a claim normally.
Okay. What doesn't a homeowner's insurance policy cover?
I would look at it in 2 ways, okay? There are items which are uninsurable, and then there are items that are not covered unless you don't customize the policy. So there's 2 different ways to look at it.
Okay.
So uninsurable items are items like wear and tear, okay?
Right.
So if you had a roof that you don't look after and it's galvanized and in 15 years it begins to rust and it leaks through, that's just wear and tear, right? You can't make a claim on that because that's a foreseeable claim. You didn't look after the house. The issue is maintenance, okay?
Yep.
Then there's other things in there such as war, terrorism, nuclear. Those things are all excluded, right? They'll never be covered, okay?
Is flooding covered?
Yeah, flooding's covered. In the States, they have this different policy wording where flooding is essentially in the southern states like Florida, Texas. The risk is much higher, and so they exclude it, and you have to go buy it through a government insurance policy. But we have flooding is automatically covered under your policy. Okay. And there's 2 sides of flooding. There's one, it is if it's caused by a cat peril. So if it is caused by hurricane, earthquake, named storm, hurricane, or earthquake that creates a flood from a sea wave, that carries the 2% deductible, 2% of the sum insured. But if it's just a huge deluge of rain and the water has changed its course in the rainwater, it floods into your house, that carries a very small deductible of $1,000 typically.
Okay. So a you can customize an insurance policy is basically what you're saying as well. You can add things into it, or you could deduct things from it if you want.
Yes, I'm sorry, and that goes into your question was what is not covered under a homeowner's policy. I was giving you the idea that there was things that are all excluded.
Yeah.
But then there's stuff that you can actually add back. And a good example of this, again, big thing coming out of Beryl, is a typical homeowner's policy does not cover sea walls or sea defenses or anything in the water, okay, unless you declare it.
So, okay, is that similar to a guard wall at somebody's house? So they have to declare that as well?
A guard wall depends on the insurance company. Some insurance companies will include automatically a guard wall.
Right.
Some insurance companies, you have to declare a guard wall. But the rule of thumb, if it's in the water, you must declare it. And if you don't, it's not covered. But if you declare it, you're then covered for it.
Okay. So just following on from that, all insurance companies are not the same. They don't all cover the same thing.
No. Well, they all have a similar coverage. So they'll all have public liability, they'll have homeowners, they all have property, they'll all have business interruption. But they have little tweaks on them. So if you look at a homeowner's policy, some have higher extensions for like freezer coverage, like in case you have a hurricane or damage, you have $5,000 in freezer coverage.
Right. Okay.
But some of them have 10,000. So there's little tweaks to them. But generally speaking, they're all fairly similar, but you can improve on them by increasing certain limits. Like the big one that you would always want to increase is your public liability, right, in your homeowners. Some insurers only offer you $250,000 of coverage, which is way too small in this world. You need to have $1 million without a question. And actually,
as a homeowner,
yeah, for
really?
sure.
Wow.
Most of our policies, we automatically include $2 million. And the ironic thing is, if you just happen to ask, can I increase it from 250 to $1 million? Typically, there's no additional charge. So it's just something that you need to do. But $250,000 in today's world is way too small. I mean, you could have defense cost alone from lawyers will cost you $200,000-$300,000 nowadays to defend a claim.
Okay. What are the benefits of having a broker?
Well, you get to talk to someone like me. The benefits of a broker, I guess, can be broken out into a couple of things. One, we hopefully can customize the policy for you in terms of improving on certain things. Two, from a price point of view, we can look at the market and tell you, well, this is where your price is compared to everyone else's. We think we can do this. And then three, I think the big part of it is on a claim. We get involved in claims. So we try and negotiate with the insurers to make sure you're getting the best claim settlement. So those are probably the three things that a broker does.
Okay, that's good to know. Some things I didn't even know. So in the last couple of years, 4 to 5 years, we've had a few hurricanes, Beryl being the most damaging, I guess, in the Southern Caribbean in the last year. Benefits of insurance in a situation like that, and also, is insurance a boon potentially for the economy?
So the answer to that, I guess, is it definitely is a boom for the economy. When you end up paying out these claims. I mean, we've paid some big claims in the islands where, you're paying out 15, 16 million US dollars to these guys who are then taking the money and they're rebuilding. Right. So there's a boon. One, you're getting US dollars back in the economy. Two, you're now hiring construction to start again. You're hiring the QSs, the architects to rebuild. So typically after a hurricane, once it gets moving, there is a lot of economic activity. And that would all be due to getting insurance money back in. I mean, there's cases in the Grenadines that we've seen, which is unfortunate, where people, their houses were gone and they have no insurance. And so they've basically had to walk away from them. And so insurance really kind of shows that if you have it and have it right, it gives you the opportunity to rebuild and to get back to where you were. So there definitely is an economic benefit for having insurance.
Okay. So usually I give everyone a little bit of a question that they don't know about. And mine for you today is, how do we educate the masses about insurance? Because I think people are a little afraid of it. They all see it as the necessary evil, so to speak. How do we better educate on the benefits of it?
It's a good question, and I'm not sure what the right answer is. Surely there needs to be more education. There needs to be more, I would like to say, tooting the horn of the insurance companies on what they do, because people only hear the bad things. And don't get me wrong, insurance companies can be real, can I say bastards? Insurance companies can be real difficult. I mean, some of them can be really difficult and can really fight you on claims.
Yeah.
And they don't need to do that. So there is no doubt some justification for situations where people can be upset with insurance companies. Okay. But on the other hand, there are also some very good stories out there where insurance companies have done what they needed to do and actually gone further in some cases to get people back to where they are. And I think a big part of this would be, or should be, is that the insurance companies should be telling these stories more, talking about what they've done, how much money they've paid out, what they've done to help people in the past. But they don't tend to do it. They don't educate enough. Even talking about stuff about the average clause,
Right.
or what does it mean to have homeowners insurance? Why should you have these things? They kind of sometimes do the basics. You'll see a very generic advertisement, please insure for replacement cost.
Yeah.
But they don't educate people enough. But I guess, again, I'm playing both sides of it, is once people hear insurance, sometimes they shut down and say, well, I don't really want to hear it, it's boring. So it works both ways.
Understood. Well, thank you. I like that response. It's good. It's a good start.
Good start. We got going.
Yeah. Ladies and gentlemen, my name is Brian Puckerin. I'm my guest today with Michael Tomlin from Tomlin Insurance Brokers. Thank you, Michael.
Thank you. That's great.
That's it.